Well, tax season is here. I didn't hear any applause. Some important changes to be mindful of. Joining us now, financial professional John Vandergriff from Blue Ridge Wealth Planners with more on what you need to know before you file. And first of all, John, I know this is the time of year we kind of get in that tax mindset, right? But really, this is 365 days a year. We need to be thinking about this all year long.
Yeah, it depends on how we want to approach it, because when we wait till tax season, we almost have to take more of a reactionary approach. If we look at it year-round, it allows us to be proactive and say, what can I do today that avoids taxes from being a problem maybe in the future? And so if you don't really feel like you know where to start, talking to a financial professional, they're the ones who usually help you look forward, where your CPAs and your tax professionals help you with preparing taxes and making sure you don't make the IRS angry with what you have done in the past and the paperwork that you do to justify it.
It makes it a lot smoother if you're already thinking about it way ahead.
Yeah, for sure.
Major changes, things we need to know now that we are in that mindset heading in as we get ready to sit down and fill these things out and send it off. What do we need to know?
Yeah, the good thing is there's not much to do for 2021's year other than maybe making a contribution to an IRA to try to bring a little bit of your income down. I'd say the biggest change last year was the child tax credit. It moved from that $2,000 to anywhere from $300 to $3,600, and some people elected to have that sent in monthly distributions. Some people forewent that so that they could have it as a tax credit for filing this year. Bad news is, if you took the monthly payments, you can't get both. But if you did put that off, that could be a nice surprise when you go to file your papers. When we know tax credits are just an immediate reduction in taxes, not like a deduction where it just reduces your income. So tax credits are good. As we know, standard deductions have been pretty high since taxes changed. So, you know, those are pretty big thresholds. If you didn't give a lot to charity, you may not be able to itemize this year, just like you did last year. Income tax brackets, as the percentages go, are largely the same. But one of the things that's interesting this year when it comes to charitable donations, even if you aren't itemizing your taxes, you can still deduct up to $600 for a married couple or $300 if you made a cash donation to a charity. So make sure you do that. It doesn't sound like a lot, but you're probably like me. I would get $1 less taxes if possible. So anything,
whatever you can do. Yeah, exactly. Every little bit can help out. A lot of people still working from home, obviously because of the pandemic. Some people choosing here, you know, to stay at home. And can they still write off, you know, some of the expenses, utilities, office supplies when filling out the taxes? And is it worth it?
Well, unfortunately, with the tax changes that happened with the last tax code, a lot of those were negated for a lot of people, except for people that are self-employed, who their home is their primary working location. So if that's you, you do still have some options. I would just encourage you, if you go and use a tax professional, see what you're eligible for. They're knowledgeable on all the things that you're able to deduct, but you may have better luck trying to go to your boss and saying, hey, that office chair I had to buy, it costs this much, can you add it to my paycheck? That may get you a better, more successful situation.
Exactly, yeah. It's good advice, though. Check, because don't assume in that situation.
And don't get what you don't ask for.
Yeah, all right, John. Appreciate it as always.